Are we on the cusp of a major market correction or even a bear market? Can you envision your portfolio dropping by 10 to even 30%? Are you prepared to prolong your retirement because you've experienced a major drawdown in your retirement accounts? These are questions I need to pose to you. Are you prepared? Are you doing your due diligence? I've conducted my due diligence today and I'm going to share my findings with you. My name is Boris Portnov. I'm an active investor and I'm going to share my thoughts with you today. What moves valuations in the market? Now, in the short term, the market has gone to sky-high nosebleed levels, but the question is, are these levels sustainable? Now, the short-term movers is what we call technical analysis. It's basically short-term charting formations in which buyers and sellers are now scanning for the same patterns, and they'll initiate the same trades in unison when these formations take shape. When they all initiate the same trades in unison, it becomes a buyer's market or a seller's market, and prices react in the short term. However, the question is, are these valuations sustainable? When we look at long term, we're not looking at technical analysis, we're looking at fundamental analysis. Fundamental analysis, on the other hand, is more so when we analyze the underlying companies in which we're investing in. We look at the underlying company, we look at their earnings, their debt to service ratio, their forward guidance, and the sectors in which we're investing. We're looking at the economy as an aggregate, as a whole. We look at long-term indicators to try to determine the trajectory of the economy. Now, one of the major indicators that people often use to determine whether markets are overvalued is what we fondly call the Warren Buffett indicator. The Buffett indicator is basically the gross market capitalization divided by our national gross domestic product, the market cap divided by the GDP. In 2019, our Buffett indicator was nearly 200%, or in excess of 200%. Now here we have is a chart of the historical values of the Buffett indicator. As you can tell, from 1997 onward, we really started kind of teeter-tottering above and below parity. This line here across the middle is parity 1-to-1, in which the market capitalization is 1-to-1 parity with the gross domestic product. Around 2017, early 2018, we really ratcheted it up and really became overvalued in our market valuations. But despite overvaluations, we've still managed to hold those levels, and the market has continued to rally despite really being overvalued. Now, is this sustainable continuing going forward? This 2-year rally, question is, will it continue? Does this rally have more legs? The last chart I want to show you is our GDP chart. And as you can tell, here we are in 2019, we had a drawdown in our GDP. And that coincided with 2019 over here, which was the subprime mortgage scandal, the recession, the Great Recession, the subprime mortgage scandals. So that was 2009, and that coincided with the 2009 drop in GDP. So for 2020, we're forecasted to also have a contraction in our GDP. So if in fact we do have the forecasted contraction in GDP as many economists are predicting, then I do anticipate a major correction or even a bear market in our equities markets. However, if we continue to have reopenings in our economy, we don't take us backwards, and we don't have more quarantines and more lockdowns, and we continue to go ahead and reopen our economy, I anticipate that maybe the market may be sustainable. We are a service-driven economy, and consumers want to go out and spend. And today is November 19th. The market is rallying big based on this news today on a potential COVID vaccine.
This is the news that we've been waiting to hear. Pfizer and BioNTech reporting the first results from their phase 3 vaccine trial, saying that in this interim look, the vaccine showed to be more than 90% effective in preventing COVID-19 cases. Now, this is the first.
Now, that's some big news. In fact, markets are rallying big today on this news. The S&P is up 2.5% as of today, as of right now, based on this news. So this is promising data. And I think that if we continue to open back up our economy and GDP does not contract as many economists are predicting, then the market does have sustainability and more legs. Otherwise, I anticipate a major correction, even a bear market taking form.